All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's up a little bit here today, up about another 15 points, right? It's pretty much opened up and, rallied off of the open here, trying to push back or push into last night's or the night before's overnight highs. And, as the market awaits a tweet from U.S. President Trump about how talks with the trade negotiator are going, and what's transpiring from that. There's there's an interesting undertow in the market here today, but really what was yesterday's weakness is today's strength. In terms of tech, and helping to push things higher. But we're seeing pretty much gains across the board. Small caps pushing into new short-term highs with the IWM, right? We see the emerging market ETF pushing into new short-term highs, the FXI into new short-term highs. So it's a very bullish type of set here this morning. There's really just nothing bearish about it, unless you want to look at the banks and say, well, the banks are lagging a little bit. And then you have something. But outside of that, not a whole lot. This morning, transports were down. They've rallied on back here, and they were sent stumbling with FedEx and UPS and all of that's down. It's interesting, kind of looking at the news and the whys and the hows and all of that. But there's not a lot of information on why UPS and FedEx fell this morning. As I go and piece things out, most of the news on it is that basically they're rehashing something from the past, right? They're trying to figure out why, and so they rehash news from the past. That's what most of the FedEx and UPS news is. But where I think it's coming from, or why the drop here this morning, I think it's just coming from Stamps.com earnings. Stamps.com reported earnings, and you could see the stock was at 200 yesterday. It's down almost 60% here today. Just getting absolutely blistered here, and this has had a little bit of an effect, or has had an effect, as they do have a relationship and an ongoing business with FedEx and UPS, and so that is kind of what I attribute it to. I still kind of stand by what I said this morning. Without something really concrete, and this is kind of unhardened concrete, right? Wet concrete. It's tough to not take it right on the open, and I did, and I've been watching FedEx rally back all morning, and it's something that I would like to short again. I'd like to get back into the short side. I've been looking for an opportunity to do that. It hasn't come here just yet. But we saw the, pre-market or post-market action yesterday, kind of around here at 180.5. And I can't help but wonder if we don't see FedEx hit some resistance up here around 180. And that's where I'll look to, step back into some puts here on FedEx this morning. I'm not looking to get back into Twitter. I cashed out of Twitter here this morning, took a small loss on it. But Twitter's breaking above yesterday's highs. And so, there's it's breaking the downside signal. So, okay, move on next. And, that's how I'm looking here at Twitter. In fact, I think you can make a pretty good argument that you should buy Twitter off of today's low, right? With the setup and with the break of yesterday's high, and, look for a further, in the short term, look for a further retracement and gap fill here overall. So, I'm not looking to step back into Twitter on the downside here at all. I've been watching J&J. This is one that was very tempting to me yesterday because of the gap down, this little island reversal element. Now, I just didn't like the overall price action that we saw throughout the day. Obviously, this is going to be a little more market weighted, and we see it climbing on back here today. Nothing really to sink my teeth into from a put standpoint here with J&J. And really not interested in a long here when it comes to Johnson and Johnson. Some other things out there that I find really interesting today. U.S. Steel was upgraded this morning, and it was in fact. Let me get the upgrade here. Sorry, I thought I had it on my notes. 1 second. All right, here we go. But U.S. Steel upgraded from buy or to buy from hold with a $30 price target here on it, with higher pricing and an increase in EBITDA estimates or earnings estimates, essentially. But rising material cost, it's one of those where we start to see the analysts getting a little bit behind this. It's had a very bullish volume pattern here associated with it. We talked about this pre-earnings and just how cheap the company is, right? Just absolutely how cheap the company is. And the earnings weren't all that great. The earnings were, well, but the stock has just continued to climb on higher. And, look, if you're kind of in that camp where everything is going to be fine in the markets, and we're off to the races here in 2019, and this may be a big bad bull market year. U.S. Steel is one of those that you could be looking at a potential 50% upside here over the course of the year. Yes, there's going to be tariff news and trade news and all that's going to affect it. But when you look at the underlying internals here of U.S. Steel, it does look like some of the worst have been priced in, and that there is a little turn. Now, it does concern me to see the upgrade today and the stock not going higher. Right, that to me is a little concerning, especially in the short term. That the market has said, okay, enough's enough. We're not ready to go higher with something like U.S. Steel here just yet. While I'm bullish on U.S. Steel, I don't really have an entry point. I'm more bearish on Alcoa, but Alcoa, you could argue that the analyst commentary that was bullish for U.S. Steel is similarly bullish for Alcoa. And while Alcoa, I got the little bear signal right back here. I was looking for some confirmation to get in under 28, never got it, and it's just kind of continued on higher here. The volume pattern is very positive. It's very bullish, and that is definitely a chart that if it's able to kind of break above 30, hold above 30, could start to see a little kind of squeeze action pushing it into the $32 to $34 area here with it. So anyway, that's going on there with the upgrade. I posted into the feed. I posted a piece on Caterpillar, Bloomberg, talking about Caterpillar, talking about the European Union and their threat to, impose tariffs on Caterpillar machinery if the U.S., imposes certain tariffs. So, they're going to continue to get caught up into, some of the trade war games. And, we may see the stuff with Europe, really become a bigger story after the U.S., China stuff dies a little bit. But, those risks are going to hang out there. This trade talk, these trade war risks, they are going to hang out there for years to come. For years to come. Even if you make the argument that U.S. President Trump isn't going to be president, next term, the ball is rolling on these things, and, there's going to either have to be some backward concessions or some forward momentum. There's going to have to be something. And, if he does get a second term, obviously it will create a little more empowerment here as well. So this isn't going away for the markets. This is going to be a story that's going to last, for many years and continue to last, overall. Okay, so anyway, that's I posted that. I don't really see an entry here with Caterpillar today, that I like or that I'm comfortable with. I'd been looking on the downside for Deere to kind of play play the downside on a little bit of a bounce. Well, it's been a little bit more of a bounce, and it's been a bounce on some pretty good volumes. So I do need to be cautious of that as the price action, continues to be sharply bullish here overall. But we can see the market's just kind of continuing to grind, to just grind higher here. The market internals, continue to be strong, continue to be bullish, and we're not seeing any real breakdown in those. And so for the challenge, there's really not a lot that I have to kind of look at since about it, but just buying in some of this upside here, it's just not very comfortable here for me. Trades aren't supposed to be comfortable, but it's still something where I'm looking a little more on the downside than the upside. I'll see if FedEx gives me a re-entry point here, and if it does, I will look to take that going into the weekend. And if it doesn't, I'll see where some of the other things line up, where some of the signals are later in the day, and if there's a signal worth going after, I will definitely look to do that. Just grabbing the FedEx price here for a moment. Bear with me. You can see the implied volatility on FedEx. One of the things that happened with it this morning is the implied volatility bumped up a little bit, and so it certainly helped the option value a little bit this morning. Some of that IV has come on down, but not as far as I would like. Yeah, at this point, need about a $10 move for a double when it comes to the March FedEx options. So 170 would give a double there on that, and I can use kind of yesterday's closing price as a stopping point there for it. I apologize if you hear that pounding. They are pounding away at some construction right outside my right outside where I'm recording here. All right, I'm going to do this. I'm going to go and buy some of the 177.5 puts. I'm going to do 3 contracts here. See if I can't get 330 on them. Yeah, no problem there. So, I'm just a little bit different option. I did go a little further, out of the money than the last one. But let me make sure the alert goes out here. But into 3 contracts on these FedEx puts at 3. What was my fill price here? Sorry. At 330, 330, and I bought 3 contracts at 330. That should be easy to remember. And then the 15th of March, 177.50 puts. All right. So back into FedEx here, using this little rally on FedEx to buy some puts here. And we'll run with that. So that should leave me a little over $1,000 in cash for a second position. Should something set up here this afternoon, and if it does, I will definitely look to go after it. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.